Charitable gifting is at the heart of many people's goals, wishes, and ambitions. That's true whether they're a grandfather, a teacher, a fireman, whether they're the owner of a small business corporation. What is the best way for you to give to a charity or your church if you happen to be a business owner? Is it on your personal side? Is it on your business side? Different things matter differently depending on where you are in that tax nature. We're going to talk about that on Consider This Program today. Well, good morning and welcome back to Consider This Program. I'm your host, Joe Clark.
And I'm Adam Harter.
We are happy to have you along. I was hoping we would have Brett Spangler, a CPA that's part of our team, here with us today as well. So you have a CFA, a CFP, and a CPA, or Ben Smith, the managing partner, president of eStep Doctor and Company. We like having them on the show, but we're always able to go into our CPA resources to be able to work on things. And we just wanted to bring in the charitable giving. Adam and I are both small business owners by definition. We wanted to bring what we have learned about our own life, our own financial situation, and our charitable intent, bring that to light for you guys for the giving side. So I'm the managing partner of the Financial Enhancement Group, one of the co-founders. Adam is one of my partners. He is our chief investment officer, so he's definitely involved in some of these decisions that we have to make. And because we have a partnership, there's 6 of us that are partners. Not all of us go to the same church. Not all of us feel the same way about charitable intent. Some businesses have, when you have a single owner, is a little bit different perspective, right? I would do things differently from a charitable gifting perspective if I had no partners, because there are times when it makes sense to do it through the firm versus through my own return, but we can talk about that. So let's pretend, even though we're not, you need to understand I have 6 partners. We're going to pretend today that I have an S corporation, right? And that I own 100% of it, so I can make all of the financial decisions if I want to. And Barb and I have our own personal 1040, and we want to make charitable gifts. So, Adam, I tell you that I want to make a $10,000 gift to my church. Where should that come from?
Well, I would direct you right back to one of the qualified tax partners you got to get it exactly right. Not being a CPA partner, but I think it depends what type of entity that you have in terms of where that gift should come from. And it also depends on what your individual tax situation is like. You have different answers based on the entity and whether or not you're qualifying for a standard deduction.
Now, this seemed to be like a pretty simple question. I got 10 grand.
Yeah.
I'm going to give it away. Do you want me to write it out of my FEG account, or you want me to write it on my personal account? And I'm not being harsh. What I want you guys that are listening to this to understand is he's as smart as anybody I know in the financial world. He's done this for 20 years. We take care of more than $680 million at the time of this recording. And he just sort of stuttered because you can't answer that question this quickly. There are too many moving parts. Even though the question appears simple, the solution is not. And the evidence that you need to be able to bring these things together to be able to make the decision is quite challenging. It is not a simple answer. And if you ask that question to anybody and they gave you a simple answer, I would be worried. I would be concerned that you had the wrong people on the bench, right?
Yeah.
So the first thing that I would ask me is, Joe, what's the $10,000 going for, not who's it going to?
Yeah, absolutely.
Right? So if I could write a check to the church to sponsor the church softball team, right, that could be deemed as a marketing or advertising expense. If Ben or Brett were here, they would tell you up to a certain percentage, right?
Yeah, now you're taking it out of the business.
Now I'm taking it out of the business.
Without a doubt.
I can't even say without a doubt.
If you're under the limitations.
But that is another one of those questions that people often don't ask. When we talk to people about qualified charitable distributions, if you're over 72 and you have tax deferred money, especially if you're not able to itemize, not doing a QCD is not understanding the tax code. Right? Remember, I've always said there's 2 tax codes in the United States, and it's not one for the rich and one for the poor, right? It's one for the informed and one for the uninformed, right? But you have to be willing to do stuff, right? So if you're over 72 and you have tax deferred money, that means you're taking a required minimum distribution. If you can't do if you can't do an itemized deduction, so you're taking the standard, to not do a QCD is a mistake, right?
Absolutely.
So that's, and there are people who are 72, have RMDs, who own businesses, right? So even if it was for the softball team, I would do the QCD, right? So see how complex this can get. I mean, it really is when I'm given the gift and the time that this is not, there's a lot of things that have to be thought out, right? So Barb and I have a brokerage account.
But I also know you're not 72.
You're right. I am not 72. I apparently am going to be 55 here in
I'm actually just covering my own tracks.
Well, okay. Oh, I get it. I see how you are. So there's that part. From a standpoint, and I will tell you, when I go to make gifts, and charitable gifting is a big part of Barb and I's life. I just asked Ben the other day, the CPA that does my personal return, right? When I was getting ready to make a gift, and I was thinking about, would it be better to come out of one of my companies? Because I have a couple other companies that I use. Would it be better to come out of the company or the 1040? And he was able to remind me, very, very quickly, here's why it needs to come out of the personal return. But it's because I'm able to itemize, right? So there's a lot that really, really, really goes on this. And I guess what I want you to take away from this is use the resources that you have, right? So, I'm a checklist maniac, right? I mean, it's if you don't have a checklist, I really don't want to have a conversation. And I'm talking about my team, for the process. Adam's got a checklist for our investment playbook. We've got a checklist for the planning team. The 5 critical elements are in order every time that we go through. The fiduciary focus every time. And I just think using a checklist will keep people out of trouble. And we develop those checklists for charitable giving. You've got to make sure that you're paying attention to what is the type of asset you're giving, right? Who's the recipient? What time of the year are you making the gift? What's the gift going to be used for? And what are your choices, for where you're giving it? We have people who have huge assets. They call it paper rich and cash poor, right? They have a huge number of assets, but they really don't have the capacity to be able to go out and give away, an acre of farm ground, right? You can give away corn, but you can't really give away the acre of the farm. That kills you in the future. So again, it's different strategies. Try to use the CPA to the best of your ability, but
that is, and by the way, just because there's so few no-brainers, you just stumbled across one right there. Absolutely, if you have a lot of farm ground and you are charitably giving, and you are going beyond your QCD, giving the grain as opposed to giving the cash is an absolute no-brainer. Even if you're cash renting, converting a portion of that to be 50-50 or some version of sharecropping so you can donate the crop. Absolutely. You got to do that.
You get the full deduction for the fair market value without and get to deduct the input costs. Isn't that the way it works?
Yeah. Your cost you still, it'd be the same. It'd be like giving a portion of your revenue.
So in order, if you were thinking about this, you're over 72 years old and you've got tax deferred assets. In order, I still think you go with the QCD, but you would actually give away grain before you would give away an appreciated stock. It's just phenomenal when you look at the stuff that's there. And there's people that are willing to help you with that, by the way, that know how to make those gifts. 20 years ago when I would talk about stuff like this on this radio show, people would go, you can't do that. Well, now everybody knows, in the old days when we talk about a trust, you'd go to the bank and the bank would say, well, you have to have your trust on your checkbook, on your checks. Yeah. No, you don't. And they figure that out. Our checking account says Joseph A. and Barbara D., Clark, and
every grain elevator is going to be equipped to do that.
Every
nowadays. Single
one of them. And it's the same thing when we talk about the QCDs for your church, right? Or for any charity that you have. You need to understand how qualified charitable distributions work. The church or the charity is not getting stock. In this case, they're actually getting cash. It's coming directly from your IRA and going to that not-for-profit entity. And you need to remember on that, again, into this tax world, you're going to get a 1099 at the end of the year, right? That says that it's fully taxable. And you have to go into your tax return and tell them, no, I gave away all of it or part of it as a QCD to the charity, and in terms of where they are. It's just part of how the 1099 world works. But I think, Adam, all this really boils down to, and I know you prepare for everything. You're very, very detailed. But part of the Better Giver Vote program, in my mind, is developing that charitable strategy, right?
Yes, absolutely.
Have you and Andrea had those kind of conversations?
We do, and it's kind of a journey because, as you say, there's many moving parts and it's building. It's piece by piece because it's a lot of things go into it, and being prepared to give as effectively. Most important thing is to be on the same page.
Yes. If you want to stay married.
You just stay married. You do things. I do things. She does things. It's the way households work. But where money goes to is something you probably ought to do together.
We think about it in terms of percentages. We've talked about on a retirement show that we did about knowing your number. But that's the way we try to think about it is, here's the amount of money that we think will go to taxes if we save this amount, right? If we give this amount. So the percentage for taxes, a percentage for savings, a percentage for giving, a percentage for living. And then we wind up with 5% that's not allocated for the weird, wild off things that tend to happen, as opposed to knowing the number. But we try to have those conversations too, but understanding what type of entity that you're giving to, from what type of entity you're making the donation, whether it's your business, whether it's a C corporation, or whether it's an S corporation, it's a pass-through entity where it flows down to your 1040 anyhow. What is the best way for you to be able to give the money? This is where, especially if you're talking about a $10,000 gift, do not hesitate to call your CPA or to call us and have one of our team help you make that decision. You can save yourself, a substantial sum by making the gift in the right way. We use checklists. It's one of the things that we think about all the time, not necessarily one of the things you think about all the time. So hope that was helpful. Don't forget, go to yourlifeafterwork.com at 800-928-4001. Get signed up for your Next Steps meeting. It's complimentary. My team would love to sit down and share some ideas. We'll give you things to consider today and into the future. And if we choose to partner together, what FEG will do for you, and we'll put it in writing.